Well, hi everybody. It's 1 o'clock. In the interest of time, I think we'll get underway with today's webinar. For those of you who don't know me, my name's Jeanette Mindham and I look after the training program here at the Chamber of Commerce. And I want to thank you for giving up your time today to come along to this webinar on how to start your own business, presented by one of our Chamber members, Valerie Rowe-Mitchell from Emerald Business Advisors. Just a little bit of housekeeping. If you have questions as you go, can you please pop them into the Q&A section at the bottom of the bar. It may be that Valerie will cover them during the course of her presentation. If not, we have allowed plenty of time at the end of the presentation to go through any questions you may have and things like that. So when you think of a question, pop it in the Q&A bar, and there's no such thing as a dumb question, because what you're thinking about asking, it maybe someone else has got that same question too, but too afraid to ask. So we encourage you to put lots of questions in there and we can have a great discussion at the end. In terms of keeping to time, I will now pass you over to Valerie to go through the webinar. Thanks very much.
Thank you, Jeanette. Thank you, everyone. Thank you very much for sharing your time with us today. Much appreciated, and I hope we have a fun couple of, well, an hour actually. I'll go straight to it. So how to start your own business, and actually a little bit about myself. I'm not sure if you read a little bio there. So we are located in Tauranga. I am an accountant. I've got over 25 years of experience. And I found myself very passionate about small to medium business, assisting people who are just entering or been in the business for a year or two and kind of still feeling that they're not very in control. So that's kind of our niche, but today is all about how to start your own business, and it's all based on what the questions are actually we're getting from our clients and what actually everyone is asking. So hopefully we'll answer a few of your questions today. So first of all, just to cover what we're going to talk today about. So we've got 4 pillars of running a business. So I'm going to cover a few things that we would like to draw your attention straight off the bat. And then we're going to talk about structures, taxation matters, so compliance. That's always a big topic. And I think that's where the fear is. People are very concerned about how they're going to deal with all the compliance, which is not that scary as long as you've got a trusted advisor next to you, or actually paying interest and investigate yourself how it all works. It's not hard, I promise. And then we'll move on to 7 must-dos and the life of a business owner. So that's something I've over the years almost compiled into 7 things that every business owner really puts a different hat on, and we'll cover that, and of course the questions after that. So the starting point, of course, when you're going to start your own business, what do you need to think about? What is your product or maybe a service? So before we go into the business, we have to really be clear about what are we going to sell? What is our product? And or maybe that's a service. And sometimes people are quite vague about what they're going to do. So I would encourage everyone to just really focus on what is my service, what is my product, and kind of really laser focus on what it is we're going to bring to the market. The next one is the structure. And the structure of affairs is pretty important from many levels, and it might seem like not an important part at the very beginning of your journey, but of course we would like to grow, we would like to expand, we want to make sure that we bulletproof our future, right? So we know that we've got certain structure that will allow us for specific dealings in the future, and I'll cover structures in a minute in quite a detail. But that's something just to keep in mind, the structure of your affairs, and we're talking here about companies versus partnership versus sole trader. That's quite important. And also from taxation point of view, it plays a massive role what structure you're using. And then of course, we've got the marketing, which is a massive part of any kind of business owner's life, and especially if you're going to start your business as well. Marketing is, I really truly think it's like a while of a topic, and we probably will do another seminar on it, but the gist of it, you can't neglect the market. So get all the books on the marketing, get all the information about how to market yourself correctly. And in fact, I can recommend a really good book later on marketing. And it involves research of your potential niche, research of your competitors, research of your how to market yourself as well, because there are different ways to market yourself. So that's a big one as well. And of course, management side of things is your day-to-day operations, right? So your day-to-day operations of your shop, or maybe your service, how you provide it, your bookkeeping, your finances, your employees, so day-to-day stuff covered in the management. So it's kind of 4 pillars, I call them, of business ownership, which is, each of them is absolutely massive. But for the sake of today, just kind of take it in, think about those 4, and we can drill into some things today. So first of all, we would like to cover the most commonly used business structures in New Zealand. And we'll start with the sole trader today. And excuse my cheeky picture there. I thought to put the smile on your face. So sole trader. This is the easiest way to start your business. So when you say, I want to go into business, you literally can wake up in the morning and say, today I'm in business, I'm a sole trader. Because the entrance to the market is very easy, right? So you are going to trade under your personal name, under your personal ID number, and your financial year will be covering exactly the same tax year as usual, finishing 31st of March. You will complete your personal tax return, which might have different sources of income, but also if you're in business, you will add your business income to your personal tax return. So your tax return might look like wages from your employment, then maybe interest from your term deposits, or maybe some investments, and then you have business income. So the sole trader structure is very easy to trade on as a startup business. Quite often, sole traders do use term trading as, so it's not a registered name and opposed to a company, for example, but it's kind of part of your marketing in a way. So for example, I can say Valerie Rowe-Mitchell trading as Best Burgers. So as you can see, Best Burgers, there's no limited on it or anything like that. It's just my trading name, so to speak. But of course, if I come to do my tax return, it will be under my personal name. Sole trader structure is suitable for very small business and one-man band situation, because if you think that you will grow or expand, or if you will employ people, you really want to consider your starting a company. Because what you don't want to happen, and I do see it quite often, I'll just go off the track a little bit, people saying, oh, I'll be just a sole trader. But what I would encourage people to do, just think about the future. Where do you want to be? Do you want to be stuck in the box of sole trader where you by yourself? Or, and which is fine, you know, everyone is doing what they want to do. But some people say, well, actually, no, I would like to employ people. I would like to grow my name. I would like to have my brand out there. In that case, sole trader probably not the best structure for you, because sole trader is literally maybe for a plumber who just wants to go around the houses and do the plumbing and just stay exactly where they are. Everyone's got their different aspirations. But of course, just to finish the sole trader structure, you're still obligated to keep all the bookkeeping records, and you have to declare that business income as well. So we're not saying here, yes, you can wake up and say you're going to be a business owner and not worry about compliance side of things. Of course, you have to make sure you're keeping your records and all of the compliance is met just how it should be. So let's talk about the company. So company is a separate legal entity, and it does have its own date of birth, if you wish, incorporation date. It's got its own ID number, it's got its own address, and also companies will normally have at least one director and at least one shareholder, but there is always a director and a shareholder in a company. Quite often it is either the same name or the same people. So often we'll have husband and wife directors and husband and wife shareholders. If, for example, the business that is run by a husband or a wife or two partners, then whoever is running the business, they're probably more of a decision maker. So the director is the decision maker on day-to-day affairs. So we will encourage the person who is running the business to become a director, but the shareholders could be those partners. There's no issue with that, or just one person, or maybe 5 people. It doesn't matter. At least has to be one director and one shareholder. So the companies are registered with Companies New Zealand, and Companies Office New Zealand is a register of all the companies that are operating on New Zealand soil. The register it's got very important role, because what they're making sure that all the people that who operate New Zealand companies are actually not convicted of any crimes, they're not bankrupt, they're actually physical people. So of course, it's quite important to make sure that if you go to somebody and you're purchasing product of them, you're actually dealing with a real person, you're dealing with the company that is registered. And Companies Office, that's where you register your company. Also, just to cover the formality of it, so because we've created this legal entity separately, so we have to make sure that that legal entity does keep its own records and completes its financial returns and taxation returns and reports to the Inland Revenue Department. So if, for example, we have Valerie and John, and then they've got a company, so we will be doing 3 tax returns ultimately, but also on the reporting regime, the company will have to complete financial statements. That's your profit and loss and your balance sheet and your equity statement. If we're going to talk about pros and cons, so for the company, when you've got a company, you are protected from the liability, because remember, we've got our XYZ limited in the end. So limited stands for limited liability of the directors and shareholders. So what it means that if, for example, I'm a builder and I messed up the job and the house is unlivable and I'm trading under my company, then by having my limited liability company, my creditor will go after the company first, and then they might go after me for negligence. But it's normally quite a long process. And also the company, at the level of the company, if company's got its own assets, they're the ones that are exposed for any kind of reparations if my business messed up. But my personal house, my personal vehicles or investments, that is actually quite protected, because the company, the limited liability company, which is the separate legal entity, is the one that is trading. However, not to take away that director of a company does have responsibility to perform in the best interest of the company. So it's all, when we're forming a company, there's a whole list of small print, shall we say, where we're signing that, yes, I am going to act within the law. I'm not going to do anything purposefully to harm somebody else. So we still have to legally meet all the obligations. But of course, by having limited liability company, I'm not exposing my personal assets or my personal investments. The cons will be harder to start because registration is required. However, nowadays it's really quick. In the olden days, it would be 2-3 weeks. But because now it's all online, we just registered the company the other day. It took us 3 days. So from the day we started registration, by day 3, we had company registered, and that including your GST registration, your RD number registration, and the certificate of incorporation being issued. So it's pretty quick nowadays, and I would encourage you, if you're thinking of starting a business that will grow and expand, that's probably the structure for you. The next one I would like to cover is the partnership. So partnership is an agreement between two or more people to conduct a business activity. So partnership still does have its own ID number. It's not quite a separate legal, well, it's entity for tax purposes, but it's not protected legal entity. Because anything that happens in a partnership, especially tax-wise, everything is distributed 50-50 if it's two partners, or maybe 1/3, 1/3, 1/3. So partnership is a group of people, two or more people got together and decided to do the business. There's not much flexibility in the partnership with the tax side of things, unless you have a special agreement. So by default, if say, for example, me and 3 of my girlfriends, we decided to have a partnership of 4, and our business generated, I don't know, $4,000 of profit, $1,000 each, equally spread for tax purposes, and it's done. In some instances, we do have partners entering an agreement. So say, for example, if husband is taxed at the higher rate at his normal job, and the wife is taxed at a lower rate at her normal job, then if we split the partnership distribution by, say, 60-40, more to her, less to him, then of course we've got some tax saving happening. But that's a big topic with the tax. I'm not going into that. But just generally speaking, so partnership is just an agreement, sometimes just a handshake, sometimes it's a written agreement, but still needs to have its own ID number and comply just as usual with financial statements and tax returns to the ID. And the last one, I'm not going to expand on this one because trusts are wealth protection vehicles. So what it means that if there is a substantial wealth, or maybe you would like to protect your house from unforeseen split or separation, then that's when you form a trust. Or if you have formed a trust, there's a bit of ambiguity about what trust actually is. It's like a very bulletproof structure, and in a way, when I'm saying bulletproof, what I mean is if there is an asset in a trust, it's really hard to remove that. So if, for example, an unfortunate event of husband and wife having to go separate ways, but their house is in a trust, and they have a professional trustee who is one of the trustees. So in that case, until the husband and wife agree either to sell the property or divide the property, the third person, the third trustee, will keep it integral and make sure that no one is actually losing anything on anything. But with the trust, it's again, that's a bigger topic. So if you think you need to have a trust, or maybe you've got a trust and you want to actually kind of figure out what's going on, I'm more than happy to help. But the main thing to know that the trusts have trustees, the people who are actually making decisions, but also there are beneficiaries. And in fact, we've got a change of law in January about how the relationship between beneficiaries and trustees are going to change. What I would like to cover next is more of a compliance side of things, and kind of try to explain how it all works, and to display that it's actually not that complicated as some people might think. So financial year is a reporting year, and it covers a period of 12 months. And normally it runs from 1st of April to 31st of March. So that's kind of our standard financial year. So every country, in fact, has got different financial year. For example, England, they're finishing on 5th of April, or I think Australia is 30th of June. So in New Zealand, 31st of March is end of financial year. And the balance date, sometimes there are people in business, somebody will say, what's your balance date? So balance date is the last date of your financial year, which is 31st of March. And with the income tax returns, and why are we covering this? So for all the business structures we've just talked about, which is your sole trader or company or partnership or trust, all of them will fall into this same financial year and tax obligations criteria. So income tax returns are due normally by 7th of July if you haven't got an accountant or tax agent. Or you can, if you have an accountant and tax agent, then you've got extension of time, we call it. So your whole year to file your tax return, you've got a whole year between 1st of April and 31st of March of the following year. So just to give you an example, if previous year finished on 31st of March 2020, if you don't have an accountant, you had to file your tax return by 7th of July. If you have an accountant, all like our clients, they have extension of time until 31st of March 2021. Why it's done? Because the businesses are normally larger than the smaller tax returns, but also some people choose to have an accountant to make sure their taxation is taken care of in a good way and everything is calculated. So there's a little bit more time, and also it will be impossible to process all the businesses before 7th of July because it's only a couple of months before after the 31st of March. With the business expenses, so the business expenses could be split into three main categories. So the number one is, so say we're in business and say we selling cut flowers. So we'll split our expenses into three main categories. So one of them is revenue expenses. So those are the ones that are your expenses for day-to-day business, to run the business. So for example, it's stationery or lease or telephone expenses or employees wages and stuff like that. So your day-to-day business activity. So that's your normal revenue expenses. Then we've got a category called capital expenses, and as it sounds, that's something to do with larger amounts, with capital investment, maybe with the assets. So these are normally asset-related expenses. And the asset is something that lasts the business longer than a year. So say, for example, this computer I'm talking on, it will last me longer than a year. So that's my asset because I make money with that asset. So for our favorite plumber dude, we've got a van for him. So his van will last him, his van will last him more than a year. That's his asset. It takes him to places, he does the work. So that's a capital expense. And the categories have just changed. Thresholds just changed. So before 17th of March, we had $500 and up would have been a capital expense. So, and due to the COVID, now it's $5,000. So from 17th of March to 17th of March 2021, if you spend less than $5,000, then it's going to be considered as a revenue expense, and after $5,000, it's a capital expense. So it's literally as simple as if I bought a car for $4,000, I can write it off straight away. I can treat it as a revenue expense. Or if I purchase the car for $5,500, then I have to capitalize it. And of course, the difference there is the tax treatment, because if you're writing it off straight away, it decreases your profit, you pay less tax. If it's a capital item, then you can claim only the depreciation portion, which is a smaller, a fraction amount of the whole cost of the asset. And the last one is non-deductible expenses. And those are the ones that are not claimable, basically. So I've got an example there as a parking fine. And some people say, well, what if I was, and people do say that, believe me, people say, oh, I was speeding because I was rushing to work. Well, in New Zealand, the law is that if it's a legal event, doesn't matter where you were going or where you're going from, whatever that is, if it's illegal, not tax deductible. So parking fines, speeding fines, no go. And for example, there was a massive case around real estate agents, and they were saying our attire, our clothing, like we need to look presentable. And the idea came up with the decision, and it's now a binding ruling where they say, well, actually no, because it's not direct business expense, so unfortunately it's not allowed. And there are a few gray areas. So again, if you have a question regarding this, accountants are your best friends because we was schooled up on that. I hope everyone is still comprehending. So if you want to shake up a little bit, more than welcome to do that. And we'll move to income tax and provisional tax and then towards the GST. So income tax. So what is income tax? Income tax is, or income tax return, I should say, also we complete financial statements if it's a company or partnership or any kind of business, and then we'll have net profit, which is difference between your revenue and your expenses. And those expenses we were talking about, the revenue expenses. So there would be some kind of net profit, which we also will call taxable income. And that taxable income is the one that will get into your income tax return. So if your business has an accountant, the tax return will be filed within 12 months, as I said before. And what I've done here, there is a little table to have a look at the income tax rate, and you're probably familiar with that, or if not, so you can see that for individuals, it's actually staggered. It goes 10.5% and up, but then for the companies, we've got flat rate of 28. And sometimes, as you can see, for $70,000 and more, for individuals, it's 33 cents on the dollar. So sometimes for the tax purposes, if it's reasonable and within the law, we might leave something in the company to be taxed at 28 cents on the dollar. So that's where structuring your affairs is quite important, and also who are the directors, who are the shareholders, because when we're starting the business, so wonderful, but then come 12 months later, we've got a profit of $150,000, which is a great problem to have, by the way. But if we haven't structured ourselves correctly, we could be overpaying our tax quite heavily. The same with the losses. If there is a loss, is it in an individual name or is it in a company's name? So when you do go to a professional, there is a rule looking a few years forward and saying, okay, well, what happens then? What happens then? And how do we treat the future outcomes? I would like to cover provisional tax a little bit as well, because sometimes it feels like a little bit of a vague concept. But overall, the idea there that if you are in business and if you're making money, the government is saying, please prepay your tax for the next year, because if, say for example, it's a big lump of money to pay for your income tax, say for example it's $20,000, they're saying, well, if last year your income tax was $20,000, please prepay some of your tax for the next year in installments, so you don't have a big chunk to pay later down the track. Also, from management of your cash flow, it's quite difficult often to pull out $20,000 out of the business. So that provisional tax, it does feel quite often for business owners as a daylight robbery sometimes, especially 15th of January when we've got our GST returns to pay and our prof tax to pay. However, if you do engage yourself in a very organized manner of how to plan for tax and how to plan for your upcoming taxation obligations, then it can be done really well. And just a side note here, what I normally suggest to my clients, open 2 bank accounts, one if you're in the business, one for your normal operating expenses and income, and the second one for your taxation affairs. And every month, if we see that we've got a profit of XYZ, we put aside 20 to 25% to the tax account. And that's where we're making sure that we're actually setting aside the tax money, because we know it's coming. It's not the gross amount that we received is actually our money. And I think people quite often forget when they're going from employment where your tax has been taken from your paycheck and you already got your net amount, going into business, and all of a sudden there is this revenue coming up, but people forgetting that it's not the whole amount that is yours. There is a GST potentially, there is potentially income tax to pay, and it could be other tax types as well. But shortly speaking, there are a few methods to calculate provisional tax, but mostly common is 5% uplift. So what it means that if last year I had income tax of $10,000, this year my provisional tax will be calculated on $10,000 plus 5% divided into 3 installments. And installments normally fall with the balance date 31st of March, on 28th of August, 15th of January, and 7th of May. But just to keep it simple, provisional tax is prepayment of your tax for the next year. And of course, in circumstances as this year, with the uncertainty and COVID and goodness knows what else is out there happening with the business, the idea is quite relaxed in the way of how much provisional tax you pay, because clearly the performance last year might not match your performance for 2021. Quite opposite for some people. Some people actually need to make sure that they pay more because they actually flourish through this period as well. So calculation of provisional tax, quite important as well. Again, your accountant, if you don't come to us, you go somewhere else, but the accountant keeps an eye on that as well. GST, so it's goods and services tax, and that's the tax that is add-on tax. So in England, they call it value added tax, right? VAT. And it's introduced, just a little bit of useless information, introduced on 1st of October 1986, not long ago, if you think about it. And is currently imposed at the rate of 15%. Why I'm saying that? Because there was a talk that new government might change something, whoever the new government is. But ultimately, currently 15%, before it was 12.5%. In some countries, they have GST on some goods, or GST on non-GST, so for example, food items or children's stuff. So that may change for us as well later down the track. But as it stands right now, flat rate of 15%. GST registered entities charge GST on their supplies, and you can claim and put on your tax credit. So what it means basically, if I'm produced the service and I'm about to charge $100 for it, but I'm registered for GST, I need to add the 15% on the top of my bill and say, here's the bill for $115. And also when I've purchased something from somebody else, there will be GST component in there. So when I'm completing my GST return, I'll show that I've charged that much GST, I've collected that much GST, and the difference will be something for me to pay. Now, some transactions might be zero rated for the GST, and if, for example, if you're not registered for GST, then there is no GST component at all. If for example, with the real estate, if we're selling a real estate with land component in it, the GST is treated as zero rated, and then there is different treatment for exported goods and exported services. And of course, things like financial service, that's your bank fees or your loan fees, they actually don't have GST on them. So GST is on goods and services only. Rental accommodation doesn't have GST, and fine metals and all of those things. And some transactions are completely outside of the scope of GST. So for example, the gifts, or maybe entities that are not registered for GST. But that's just to answer the question regarding the GST registration. So if you are in business and you're expecting that you will make in the next 12 months, your gross turnover will be 60,000 and more, you have to be registered for the GST as per the little GST threshold. So as you can see, 60,000 and more GST registration will be required. If you're generating less than $60,000, then you don't have to be registered for GST, but you can voluntarily register. For example, in some instances, if somebody is contracting to a bigger company and they say, we only work with people who are registered for GST because they want their credit, or maybe for bookkeeping purposes, they don't want to without all the non-GST contractors. So sometimes people under $60,000 to do get registered for GST if they want to. And of course, the other points there is you can get registered on monthly or 2 monthly or 6 monthly registration, and then there are different bases, invoice basis or payment basis or hybrid basis, but that's again a bigger topic to discuss. But on one-on-one, if it's needed, we can talk about it for sure. And that brings me to that 7 must-dos, where we've covered the compliance. So that's all there. And if you've got any questions, I welcome you. But what I would like to I would like to switch the gears, so to speak, and just really draw your attention that being a business owner is like being a juggler, if you wish, and you've got 7 balls to juggle there, because as much as it's fun and challenging, it's hard work. And I would encourage people not to be fantasizing about going into a business and saying that I'll have a better lifestyle. Not necessarily, because what you will find that your business is becoming your baby, and you will be doing a lot of stuff 24/7, not literally, but on the background, it's always there, which is an amazing journey. So management covers our day-to-day operations, but also how do we operate daily, and it's day-to-day operations, more of a lower level in the way of operations with the marketing and stuff. So with the marketing, I've covered it a little bit earlier, but it's another one. So that's another head for the business owner to remember: continuously pushing your business forward, continuously promoting yourself, because the difference being an employee where the job is there all the time, the work is kind of piling up for me there. What I'm finding for myself, being a business owner, well, I actually have to go and find the job. While I'm doing the job that I'm doing, I actually have to make sure that I'm finding the jobs, which will come to me later on. So it's continuous promoting yourself, promoting the business, promoting the product you've got and the service and stuff like that, and educating yourself as what is the latest marketing techniques, what works, what doesn't, and all of that. The finance is a big one, and it's where, for example, you need to raise your funds for new equipment or just your normal management of bank accounts, just the financial side of things, which sometimes business owners either afraid or try to even ignore, like it will work out by itself. Well, no, it won't. You've got to figure out what is your technique there and make sure you manage your finance. So if we've got too little money, so what's happening? Are we under collecting our accounts receivables, or we haven't invoiced somebody, or maybe the product line is not working for us, or if we've got so much money stuck on our bank account not working for us, how do we manage it? Do we invest it in something? Do we grow? Do we open another branch, or whatever that is? So there is a lot of management of finance happening as well. Your bookkeeping side of things, it's your day-to-day bookkeeping. So we're working mostly with Xero, but also working with MYB and QuickBooks. So there are amazing softwares right now, and there's absolutely no excuse not to know what your profit and loss nowadays. Self-explanatory bookkeeping, your day-to-day operations, your invoicing, your inventory, your payables, your receivables, your bank recs has to be done. There is no question about that. The human resource hat or ball up in the air. So that's your relationship with your employees, right? So when do you need to hire? Who do you hire? What's the hiring process? What's the firing process, for crying out loud? Because that's quite intense as well. And that's quite often for people really difficult to actually enter this human resources area and employment area, because the laws currently are quite strict, and rightfully so. So we just have to make sure we're acting within the law, and it's all absolutely reasonable and doable. But just being aware that the human resources side of things is a biggie as well. kind of covered management and day-to-day operations also. And the last but not least is a product development. And I really encourage everyone who's already in business or thinking about going into business, think of your product or service as a malleable product that's continuously changing and continuously improving. Because if we make the same thing, or if we produce the same thing all the time, A, you will be bored out of your brain, but B, you will never grow or expand. So product development is very important in the way of looking what's working for us, what's not working for us, what else can we do, what market needs, what are my customers asking for, and why don't I provide this if they're asking for it? Is there add-on to my product, or maybe I should just rejig my product and develop in a different way so it's better product for my customers. So it's a lot about listening to the market, listening to the customers. But I encourage you to look at it as a fluid process rather than, oh, that's it, I'm in business. Oh, good. It doesn't work like that. So it's always a little bit of work and the progress, continuous progress. So to sum it all up, steps to take: have your business idea, figure out what your product or service, get an advice from somebody you know, and but I would encourage you not to do much of a barbecue talking, because this is quite dangerous when somebody who's not in the profession of tax advisory tells you what kind of tax returns and tax refunds you can get. Sometimes it's dangerous, sometimes it's detrimental for somebody, because they'll say, oh, John from barbecue said I can do this, and then next thing ID is on your doorstep saying, what the hell are you doing? Okay, so get advice, preferably from a professional, somebody who's already in a business and they have some kind of knowledge. If you're not willing to spend any money at that point of time, then before starting operating, you actually need to get a professional advice and make sure you have an accountant and business advisor on board with you all the way, because it's really important to have somebody who actually can assist you with the steps to take and also with the compliance side of things. And at the end of the day, what you don't know, you don't know. And that's something that needs to really change in people's mind in a way of like, oh, I'll just do things how I've always done and I'll just do the same thing all the time. It doesn't work like that. There are so many laws, there are so many changes happening. So continuous progress, continuous learning, and having somebody who just on the other side of your phone, just happy to help you, is very, very valuable. So that's pretty much it. And I hope it was informative, and I hope it wasn't too quick or too long. And I'm happy to take questions, Jeanette.
Yep, thanks very much, Valerie. That was really good and very insightful for me with some of the structures and the different obligations there are. As mentioned, if you've got any questions, please by all means put them into the Q&A box down the bottom and Valerie will answer them for you. Yeah, and just questions on anything. It's important you get it right, I think, is what I've got the message, Valerie, you know, when you start your own business.
Yeah, I agree with that. I think get it right, and also don't be afraid to be wrong. Don't be afraid. You don't need to bring the answers to your accountant. You don't need to know everything. But I think the biggest advice I would say, be open-minded and just let the information come to you and just ask the questions. And Jeanette, you said at the very beginning, there is no such a thing as a silly question. You're not expected to know anything because you live in your normal life. How on earth would you know all of this? It's in parallel, right? Mm-hmm. So there is no such a thing as a silly question. Any question, whatever that is. And I do offer complimentary meetings, so we can discuss whatever that is, and you can walk away and never see me again, and that's not a problem at all. So it's completely up to you, ladies and gentlemen.
I've got a question here. What would you advise for someone starting a charity or not-for-profit? And are the steps similar to what you've gone through today, or are they quite completely different?
They're quite different. So still registering with incorporated societies, New Zealand. So there is a register as well, but not companies office, but it's called Incorporated Societies Register. And less compliance there, but a lot more about your purpose, your vision, and how you will apply your funds and stuff like that. So it's a lot more of an intangible stuff, what you will be doing for community or whatever that might be. So quite different, I should say, shortly.
Also, if you're in paid employment at the moment and looking at starting up your own business separately, you can just run that as a sole trader first of all. Is that correct?
Yep. 100%. You totally can. The only thing to remember that you have to still do all the bookkeeping and record your business activities. So you'll still have your profit and loss statement and all of that. So the easiest way probably to just hop on Xero, open a separate bank account for your business activities only. So which means the business account, your sole trader business account, will collect all the income from your business activity, your account for your expenses from that account as well. And then it will be easy to compile a profit and loss and identify your taxable income, which will later include in your income tax return. And your income tax return will have employment line, which is your salaries, and then we'll have business income, and then we'll have amount that will be taxed there as well.
Okay, do we have any other questions out there? One of the other things, Valerie, you mentioned was a book on marketing you were going to recommend.
Yes, so that's called One Day Marketing Plan by Ellen Deeb. And if anyone interested, I can flick more details to Jeanette, or you can flick me an email and I'll send you more information. It's absolutely fascinating. It's exactly for the small business, for a business who's starting. And currently I'm reading the part about the name, how to name your business. And just very quickly to share, he's just saying that if you have to explain your name, you're already on the back foot. And he said quite often people will come to him and say, what about Nike? And what about, or Nike, or what about Adidas or Cola? But he's drawing his attention to the fact that, well, those guys have multi-million dollars budgets for the marketing, which we probably don't have. So if you call yourself Aqua Solutions, that's one thing. But if you call yourself Amakoroa Plumbing, that's another thing, because Aqua Solutions, then you have to tell people that aqua is actually Latin for water, and then solution with something to do with solutions, and opposed to saying Amakoroa Plumbing, it's pretty clear we're operating Amakoroa and we're doing plumbing. So yeah, it's quite an interesting book. I'm really enjoying it, reading it right now, so I can recommend that if you're looking at putting yourself out there and start looking at how to promoting your business and market your business.
I've just put that on the chat, the one-page marketing plan by Ellen Deeb.
Yeah.
Right, do we have any more questions, or does everyone need to go on? As we said, don't be afraid to ask a question.
Yeah, who's the bravest one?
But it doesn't seem to be any more coming in. As you said, Valerie's left her email address there, so she's more than happy for you to get into contact with her directly. And I just want to say on behalf of everyone, thank you very, very much, Valerie, for your time and explaining how we should go about getting set up. And everyone have a great afternoon, and look forward, if anything else, get in touch with our chamber as well for our further courses that we've got too. I'll be sending a short feedback form out to everyone later this afternoon. It'd be great to hear from you on that too. Thanks very much.
Thank you, Jeanette. Thank you, everyone.